Hi guys, good morning everyone. Welcome back to CAP classes. So today, continuing our discussion in Group 1 Accounting, we are starting with a new chapter. A very important chapter, that is Accounts from Incomplete Records. And the nickname for this chapter is Single Entry System. Accounts from incomplete records is nothing but single entry system. When the books of account are maintained in single entry system, obviously they'll be incomplete. No, if it is double entry, it is complete. If it is single entry, it is incomplete. Very important from exam point of view, repeatedly asked, regularly asked questions, and trust me, it is very easy to learn, very easy to solve problems. There is no complexity at all. If you like, playing puzzles or something like Sudoku, this is the area which you love. Even in ICI study material also, somewhere in the middle of this text, they told that this single entry system is something like playing Sudoku. Exactly, it is same. Why? There will be so many missing numbers. We'll try to find it out. That's all. So basically, if you understand the process of accounting, so normally what happens? Transactions occur, and these transactions will be accounted for. So first you'll write them in journal entries, journal book, and then you prepare ledger accounts. From this ledger you prepare trial balance. From this trial balance you prepare balance sheet, P&L, etc. Correct? So this is the regular way of preparing accounts if you follow double entry system. If you follow single entry system, what will happen? I'll tell you. Consider a small shop roadside, like one tea stall, like one small bakery, like one guy, having one small cart roadside and selling vegetables, or even small provisional stores, kirana stores, pawn shops, those who sell cigarettes and all roadside. One small shop will be there, they sell no. Or the best example is a small provisional store, a sole proprietor who's running a provisional store. Like, he sell groceries, he sell all the fancy items, and in some of the places they sell vegetables and fruits also. These kind of general merchants are there, no, small shop. Normally what happens, this guy is not trained in accounting with your golden rules of accounting, debit what comes in, credit what goes out. He doesn't know. He doesn't know personal account, real account, nominal account. He doesn't know journal, ledger, etc. So think from the point of view of a sole proprietor who is not educated in accounting. Whether he is educated or uneducated, that is a different story. Accounting, he doesn't know. What he knows is buy, sell, earn profit, survive. Buy, sell, earn profit, survive. He has business acumen, but he is not having accounting acumen. Then what happens? He will write something. In one book, he will write something related to accounts. Something related to accounts. But he will not maintain proper books of account. So what is the problem here? Books of account are there in some form, but proper books of account are not there. Pavan sir, can this happen in a company? No. This single entry system can never be seen in a company, because for Companies Act is applicable. Companies Act has given the definition of accounts, 128, 129 sections in the Companies Act. If you read what is financial statements, what is books of account, clearly defined, and they clearly mentioned that the companies have to follow accrual method of accounting, and the books of account must be kept under double entry system. If you are following single entry system, that is a violation of Companies Act. So this cannot be seen in case of banks, or in case of limited companies. You cannot see single entry system. Single entry system, typically 80% of the cases sole proprietor. Few cases partnership firms also. Few cases partnership firms, but typically this will be in case of sole proprietor. So what happens? Imagine there is one provisional store. There is one provisional store. This is a provisional store, and here owner is there. Here all these are inventory. All this is inventory. So he is sitting in the shop. If the customer comes, he will sell. That is his business model. If customer comes, he will sell. That is his business model. So he purchases goods. Purchase of goods. He purchases goods. So he'll go to wholesale market. He'll go to wholesale market and he'll purchase goods. Pavan sir, that bill is available. Yes, that bill is available. But he doesn't know passing the journal entry. Purchase as account debit to cash account. That he doesn't know. Purchases account debit to cash account, that it doesn't know. And he sold goods on cash. Sale of goods. Sale of goods. He sells goods. He collects cash. He sells goods. But he doesn't know to pass cash account debit to sales account. Doesn't know. But he is smart enough. If he sells goods on credit, he will have one small book. He will have one small chota book in pocket. Say Pavan is a regular customer in that shop. You are the shopkeeper. You are that shop owner. Pavan is a regular customer. He comes, he purchases things and all and he goes. So he's a regular customer and a nice guy also. Like I'm normally also a nice guy. So I came to your shop and I said, I need 2 biscuit packets. Sir, le lo. I need 1 kg rice. Sir, le lo. I need some snacks. Sir, le lo. I need 2 kg vegetable. Sir, le lo. I need 1 milk packet. Sir, le lo. How much? You said 210 rupees, sir. I said, okay, liklo, right, I will pay later. If I am a regular customer and loyal customer, you are like, okay, sir, no problem. Then what happens? We'll take one book, small, will be there in your pocket. You open it and you will write Pavan Kumar. Date. आज का डेट क्या है? Hello, what is today's date? 8th September. Okay. 8th September 2021. Then you will write 210 rupees. You do not know to pass a journal entry, Pavan Kumar account in brackets debtor, debit to sales account 210. You do not know, but you have enough records to show what is your debtor so that you will not forget. So when next time your customer comes, he'll say, hey, what is the bill I need to pay? You will tell, sir, on 1st September you came, sir, you bought 180 rupees, sir. On 5th September you came, sir, you bought 245 rupees, sir. On 8th September you came, sir, you bought 210 rupees, sir. Sir, total is this much, sir. So this is the amount you need to pay, sir. How much it is? 5, 8, 4, 12, 13, 2, 2, 2, 6. Sir, 635 rupees, sir. Now you will collect 635 rupees. When you collect 635 rupees, you do not know passing the journal entry. Cash account debited to Pavan Kumar debtor account. You do not know. What you do, you know? You received cash. You received cash. You will strike it and you will write 0. You will show 0 balance. Next time again when you sell, again you will write. So same thing happens with your credit purchases also. Whenever you buy goods in the credit, you will go to wholesale shop, you buy goods in the credit and you will say, Anna, please give me 4,000 worth rupees goods in wholesale, Anna. I will pay after 10 days, Anna. So your supplier also knows you and he sold goods to you. Now again some other book will be there like this. Some other book, or maybe in this book only you will write somewhere. You do not know passing journal entry, purchase account, debit to creditor account, but you know that for so and so Apparao you need to pay 4,000 rupees. That you remember. This is exactly called incomplete records. So now the accountant has come. Accountant has come. This accountant is like you, CA intermediate student, articled assistant. So you went like this to the shop. Hey, bring your accounts, bring the cash flow statement, bring the P&L, bring the supporting documents, bring the books of prime entry. Then the wholesaler, then the storekeeper says, oh, hello, excuse me. You stop your drama. What you want to tell me? Then you'll say, sir, my principal auditor sent me to verify your books of account, sir. Please give your P&L balance sheet, sir. He will tell P&L balance sheet, cash flow. I don't know. Sir, what you have, sir? Incomplete records I have. Now you are the accountant. You tell me what you have to do. Simple. Simple. From whatever info available. From whatever info available. Construct or develop books of account and determine his profit and his financial position. Sir, but to determine profit, we need P&L account, na sir. If P&L account is there, I write schedule 3 requirement, sir. Accounting standards, sir. All those are not here, sir. You do not have by revenue. You do not have two cost or expenses. You do not have two provisions. You do not have two blah blah blah. You do not have two net profit. So this is where you prepare P&L and you determine net profit 22 crore rupees for the year ended 31st March 2021. This can be done in double entry system. If it is a single entry system, when incomplete records are there, you cannot prepare this kind of P&L to determine profit, but still you need to determine profit. You are thinking of how to determine profit. Then your mind gave you one super idea. Oh my god, if this is my balance sheet, this is as on 31/3/2021, this is as on 31/3/2020. If capital is there, here capital is 1,20,000, here capital is 50,000. Without loss of generality, if there are no more transactions, opening capital 50,000, closing capital 1,20,000. What is the 70,000 profit for the year? Khatam. Half of single entry is over. Sir, are you joking? Yes, half not over. So simple. The difference between closing capital and opening capital is profit during the year. Now Chintu will get it out. Sir, what if he introduced, how can you say profit 70,000, sir? What if he introduced 20,000 more during the year, sir? Additional capital, sir. So the difference between these two can be additional capital also, or the difference between these two can be drawings also. So adjust closing capital with additional capital introduced and drawings, subtract opening capital from that, the difference is profit for the year. Khatam. So what you need to do, closing capital XXX less additional capital introduced during the year. Additional capital introduced during the year. Add back drawings during the year. Add back drawings during the year. This is adjusted closing capital. What is this? Adjusted closing capital. From that, subtract minus opening capital XXX. This difference is profit for the year. Simple example I'll tell you, okay? Easiest example to understand. You are an employee. You are an employee. Okay? You're an employee. You invested some amount in equity shares of different companies. You bought some TVS Motors shares, you bought some Infosys shares, you bought some Tata Consulting Services shares, you bought State Bank of India shares. Okay, you bought IPCA laboratory shares. Okay, you bought different shares, say on 1 or 31 3 2020, and this investment is 5 lakhs. You don't maintain books of account. You don't maintain books of account. Why? You are an employee, you are not a businessman to maintain all books of account and all. And you have not sold any share, you have not purchased any share after this. So on 31/3/21, this 5 lakh rupees increased to 7.4 lakhs. So on 31/3/21, your closing investment is 7.4 lakh. Now you are not maintaining books of account. If you maintain books of account, you will write revenue here or selling price here, cost, expenses here, then this is net profit. But this is not applicable for you. Now you tell me, without maintaining proper books of account, if this is the transaction, what is your profit for the year? Pavan sir, common sense Pavan sir, use brain Pavan sir. 7.4 lakhs is the closing value, opening value 5 lakhs, 2,40,000 is the profit for the year. This 2,40,000 is the profit for the year. Beta, if you can do this, that is what you are doing here also. So during the year, if you purchase shares, you need to adjust it from here. During the year, if you sold shares, you need to adjust it from here. Then you need to compare closing value and opening value. Whatever the difference is, profit. Whatever the difference is, profit for the year. So this is step 1 in accounting from incomplete records. So step 1 is you need to prepare opening capital. You need to determine opening capital, you need to determine closing capital, adjust it with additional capital, adjust it with the drawings, subtract opening capital from it, it is profit for the year. This is step 1. Step 2. Now the question is, Pavan sir, when the books of account are not clearly available, how to calculate capital? Pavan sir, your grandmother will tell. Capital figure also is not available, Pavan sir. If capital figure is available, closing capital 120 lakhs, opening capital 85 lakhs, profit for the year, this difference, that I can tell if these numbers are available. No. What if those numbers are available? Then step 2, you prepare opening statement of affairs. Sir, affair? No, sir. CA student, sir. What affair will have, sir? Beta, if you are CA student, you will not have that affair, but you will have 2 affairs. Sir, 2? Yeah. 2 affairs you will have. Sir, what are they? Opening statement of affairs, closing statement. 2 affairs for CA student. Sir, I have a 3rd affair also, sir. Then you will not pass CA. I don't know. Maybe I am an idiot. So, you can handle, I don't know. So, in accounts, we have 2 affairs. One opening statement of affairs, second one is closing statement of affairs. What is this? It is similar to balance sheet only. Simple. Put whatever the numbers available. You are maintaining some kachara form of books, no? Some raw, rugged manner, you are preparing something. So whatever the data is available, that you fill. Sir, I have debtor, sir. Very good. Right here. Sir, bills payable, sir. Right here. Sir, bank loans are right here. Sir, creditor, sir. Right here. Sir, prepaid expenses are there, sir. Right here. Sir, inventory is there, sir. Right here. Sir, furniture is there, sir. Right here. Sir, land and buildings is there, sir. Right here. Okay. Now this side, add. Here 5 toy are there, here 3 toy are there, sir. Balance sheet not tallying. 2 toy difference is there, sir. That 2 toy you will put here and say this is capital toy is your best friend. Oh no, balancing figure. Simple. Whatever the data is available, put it. Put it. Determine the balance. That balance is capital. That's all. Pavan sir, is it scientific way of preparing a balance sheet? No, unscientific. Pavan sir, is it a systematic way of preparing balance sheet? No, unsystematic way. Pavan sir, is it as per the accounting standard, as per the generally accepted accounting principles and accepted financial reporting framework in the country? Enough. That much of drama is not there here. This guy is a roadside chintu, selling bun, tea, coffee, Sugian, Boost, Horlicks. That's all. More than that, he doesn't do anything. So for him, if I need to calculate profit, what to do? This is the way. This is the way I need to calculate. For him, if I need to calculate capital, what to do? This is the way. Pavan sir, is balance sheet and statement of affairs same, Pavan sir? No. Balance sheet is scientifically prepared. Balance sheet is systematically prepared. Balance sheet contains all the elements of equity, liability, asset. Balance sheet will tally. But statement of affairs is not systematically prepared, is not properly scientifically prepared. It is just like, compilation of numbers. Whatever the number is there, mix and match. The balance, statement of affairs will never tally. Statement of affairs will never tally. It will show some balance. That balance normally will be capital. Sometimes if capital is given, it could be some building, something like that. But generally, when you prepare statement of affairs, opening balance, balancing figure will be capital. So you'll prepare it on 1/1/2021 and you'll prepare it on 31/12/2021. This is called opening capital. This is called closing capital. Difference between the two is profit. Easy, no? Single entry system is actually very easy. Then this is level 1 problem, level 2 problem. ICA wants you to take to level 2. In Mary also you'll level up. Okay, so level 1 is over. You'll go to level 2. Level 2 will have bigger challenges. Level 2 will have bigger challenges. So before going to level 2, you need to eat so many powers. You need to go big ditch. You need to take bullets and all. Sir, then single entry system level 2. What do we do, sir? My huna, your weapon. So this is level 1 problem. Calculation of profit and calculation of opening statement of affairs, closing statement of affairs. Determination of opening capital employed, closing capital employed. Difference between the two is profit. This is one area. Second area is you'll have to prepare various working notes. For example, debtors account, cash account, creditors account, sales, purchases, bills payable, bills receivable, fixed asset account, inventory account, etc. All these ledger accounts you need to prepare. All these are your working notes. In every ledger account, every working note, one balancing figure will be there that will complement to the next working note. For example, debtors you are preparing, opening debtors you have written, closing debtors you have written, during the year what is sold is also written, debtor account debit to sales account. Then here you will get what is the cash collected from debtors that will be taken to cash book, or if cash is already given, sales will be taken to this. Simple. You will prepare a ledger account. Say for example, furniture account, opening balance is given, closing balance is given. Okay, so you will calculate depreciation. You will calculate if there is any sale during the year. You will write if there is any purchase during the year, and then balancing figure will be there. If one balancing figure is there, that if it is cash sale, we'll take it to cash. If there is a loss, we'll take it to P&L. That's all. So basically, all these ledger accounts will prepare. Then level 3 problem. Finally, this Mario time will go to Princess, no? 8th level. That problem will come. Partnership. 3 partners. Drawings. Interest on drawings. Additional capital. Interest on additional capital. Interest on capital. and so many transactions they'll give, 20 points they'll give. Then they will ask you, prepare balance sheet P&L. Then it is grandmother problem. Simple. These are the levels of problems. Trust me, except one or two problems. All the problems are LKG problems. LKG, when you open ICA, CA Intermediate Account Study Material, CA Intermediate Account Study Material says, sir, this is looking like a CPT, CA Foundation problem, sir. Easy problems. Why they have given easy problems, sir? Auditing starts where accounting ends. Correct. Auditing starts where accounting ends. CA Intermediate starts where CA Foundation ends. So here CA Foundation ended. This is end of CA Foundation. This is your starting of CA Inter. In that group 1, in that accounts is here only now. So little above foundation. Sir, what are you talking, sir? We are doing CA. Beta CA Inter accounts is little above CA Foundation accounts. Little. Advanced account is little more. Then grandmother of accounts will be there in CA final. Sir, after CA final accounts, that is the end, sir. No. After CA final accounts, whatever I learned and whatever I taught, after that I climbed around 100 steps, like IFRS, US GAAP and all. You know, convergence, differences, carve-ins, carve-outs, difference between Indian accounting and UK accounting, Indian accounting and US accounting, difference between UK accounting, US accounting. So many things will be there above. But basically what I mean to say is this is fundamental level. So problems will be very easy. But sometimes, surprisingly, I will come across some of the students, they say, sir, single entry system is very difficult. Sir, I'm like, what? But if single entry system is difficult, you cannot even imagine what is your future. Single entry is very simple. Okay? Very simple. Okay, in Telugu we call Pavala problem. Pavala problem means 25 paise. 1 rupee will be there, no? In 1 rupee, 1/4 part is called Pavala. Okay, these are the single entry problem is this kind of problem. That's a simple problem. Okay, now let us go to ICA study material, which is our Bible, which is our Bhagavad Gita, which is our, you know, Quran, which is our Guru Grantha, which is our Torah, which is our holy book. Okay, so look here. So what is the definition of single entry system and what are its features? Types of single entry system, they'll tell you there are 3 types of single entry, but I'll tell you one thing, okay? There are no 3 methods, whatever the type is. Finally, what we do is same. Kachra information is there. Information in raw, rugged, unsystematic, unscientific way is there, which is actually not accounting. We are arranging them in such a manner that we will be able to construct financial statements. Determination of profit. How do we do that? Simple. Capital at the closing minus capital at the opening is profit. Then statement of affairs. We have 2 affairs, opening affair, closing affair. And we'll compare it with the balance sheet. What is the difference between balance sheet and statement of affairs? Some lecturers say they are same, but they are not the same. Balance sheet will tally, statement of affairs will not tally. Balance sheet is systematically prepared, statement of affairs is systematically not prepared. Balance sheet will be prepared from the ledger account balances, but here statement of affairs will not be prepared from ledger balances, because basically you do not have ledger accounts. For example, in balance sheet, we'll write inventory 2 lakhs. How we do that inventory 2 lakhs? You know, we'll open inventory register, priced stores ledgers, inventory valuations, accounting standard 2, opening inventory, how it was valued in the previous year, what is the movement of goods during the period, then what is the closing stock, how it is valued. This is how you put in balance sheet. In statement of affairs, simple. We'll go to rack. How many items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Sir, 10 items are there, sir. Hey, each item how much? Sir, each item 200 rupees, sir. Likho, inventory 2000. Khatam. This is how we prepare statement of affairs. Sole trader, dude. Sole trader. He doesn't know accounting standard 2. If you say specific identification method, FIFO method, LIFO method is not allowed. Weighted average method, standard cost method also can be implemented if there are no. Then he'll say, Ray, what are you talking? Your CA intermediate knowledge you don't show in sole proprietor, no? When you go to company, then show. Are there, they will ask about deferred tax and all that we do not know, sir. There we do not do overaction, sir. When we go to company audit, we will be silent, sir. But when we go to sole trader audit, we speak. Do you know accounting standard 22 deferred tax? I know. You know only heading. He doesn't know that also. So you will show. Okay, like if the other guy doesn't know Tamil, I speak Tamil. But if the other guy knows Tamil, I will not even open my mouth in Tamil. Okay, so then technique of obtaining complete information for preparation of financial statements, which is the last step. Finally, you prepare financial statements. Correct. Then they are giving you the process. Incomplete books of account will be there. Completion of double entry in all transactions is what you want. Accounting process is to be followed. Preparation of trial balance, and finally financial statements. They have given some general techniques and all. Okay, which I'll explain you practically with the help of some problems. Just read this and then we'll go forward. Okay, then they have prepared beautiful word art also, art copyright to Institute of Chartered Accountant, Picasso, Leonardo da Vinci and ICA, like that they prepare, but there will be nothing in the diagram. Okay, introduction. Very often small sole proprietorship and partnership businesses do not maintain double entry bookkeeping system. Very good. They keep a record of cash transactions, credit transactions only, but at the end of the accounting period, they will want to know the performance and financial position. So throughout the year, 364 days, no accounting. Final day, they'll come and say, sir, what is my profit, sir? Hey, idiot, if you want to know profit, you need to make proper accounts. No, sir, I do not know accounts, no, sir. Okay. This creates some special problem to the accountant. This chapter discusses how to complete the accounts from available incomplete records and addresses the problems faced in a single entry system. The term single entry is popularly used to describe the problems of accounts from incomplete records. In practice, quack accountants follow some hybrid methods. Wow. For some transactions, they complete double entries, and for some other, they complete just one aspect of the transaction. In fact, for some other transactions, they even do not pass any entry. Briefly, this may be stated as incomplete records. The task of the accountant is to establish link among available information and to finalize these accounts. So features are there, just read. Not important from exam point of view, but just single reading. Okay. So it will be inaccurate, unscientific, unsystematic. Then no record of real and nominal accounts. In most of the cases, record is kept for cash transactions and personal accounts only. Cash book mixes up with business transactions and personal transactions of the owners. There is no uniformity in maintaining records, and the system may differ from firm to firm depending on the requirements and convenience. Profit under the system is only an estimate based on available information, and therefore true and correct profits cannot be determined. The same is the case with the financial position in the absence of proper balance sheet. That means you will prepare balance sheet P&L, but you cannot say that they are completely accurate. There are three types of single entry system. Okay, first one is pure single entry system. Second one is simple single entry system. Third one is quasi single entry system. What is the difference? This one. In pure single entry system, only personal accounts are maintained. In simple single entry system, personal accounts and cash book will be maintained. In quasi single entry system, personal accounts, cash book and some subsidiary books also will be maintained. But I will tell you, there are no three different methods or ways of solving the problem. Solving the problem is only one thing. Some broken bits and pieces information will be given to you. You will add, and finally you will try to prepare P&L balance sheet. For us, what do we want? Sir, 10 marks question came, sir. 9 marks if I get, that is enough, sir. Don't worry, you will get 10 out of 10 also. If 10 marks question is given, you will get 10 out of 10. If any student is doing single entry system wrong, open Google, ask dear Google, where is nearest museum? Go to that museum, stand there. You are a museum piece. People will come and say, this guy only December 21 exam, no single entry system, this guy did wrong. Then you will stand. And people will purchase 5 rupee ticket to see you. Sir, today what happened to you, sir? You are hyperactive. Vaccine effect. Second dose of vaccine. So, that's all. And now we are entering into the zone where we solve some problems. Net worth method or statement of affairs method. What is this? What is this? Ascertainment of profit by capital comparison. Take closing capital, subtract opening capital, and then you will calculate profit for the year. This is called net worth method or statement of affairs. So what they are showing, closing capital here, less opening capital, that is profit or loss for the year. Again, another beautiful diagram is created by ACCA, which is actually not required. Okay. Now put the heading single entry system calculation of profit using capital or net worth method, and then copy this from this particulars. I have to copy this. Particulars. Another trade down, capital at the end. To that, add drawings, less additional capital introduced. First one is A, capital at the end. To that, add back drawings, subtract additional capital introduced. Then B, capital at the beginning, opening capital employed. Then the difference between the two is profit. That's all. Difference between the two is profit. Answer, is there any other way? The same thing, whatever you have written in the statement can be written in one ledger account also. Okay, look at the ledger account. Capital account you are preparing. Capital account. By balance brought down, opening balance. To balance carried down, closing balance. Drawings will reduce capital, so debit. Additional capital will increase capital, so credit. So first what you write, by opening balance brought down. If you bring any additional capital, by additional capital. If you withdraw money, to drawings. Closing capital to balance carried down, closing capital. Then add the debit side, add the credit side. Some difference will be there. That will be net profit. If it is increasing capital, that means if the balancing figure is coming on the credit side, it is capital. No, sorry, it is profit. Balance is coming on the credit side, it is profit, because profit increases capital. Sir, if balance is coming on the debit side, what to do, sir? Sir, please tell me, sir, what to do? Balance is coming on the debit side, sir. What is that? Tell me. Net loss. That's all. You understand? Simple. Okay. Then statement of affairs, sir, how to prepare? Simple. Put all the assets on the right hand side like balance sheet, all the liabilities on the left hand side like balance sheet. There will be one closing balancing figure, that is capital. That's all. Check all the assets: building, machinery, furniture, inventory, sundry debtors, bills receivable, loans and advances given, cash and bank. Loans and advances means given only. Loans means taken. Cash and bank, then prepaid expenses. All these are the assets. Then the other side, loans, bank overdraft, sundry creditors, bills payable, outstanding expenses, all these things you will write. Finally, one figure will come, that is capital. That's all. That's all. You understand? So they have given the difference between statement of affairs and balance sheet, which already I have explained. Already clearly I have explained what is the difference. Now we will do problem number 1. So before we go and solve the problems, you tell me, as far as theory is concerned, are you thorough with theory? Shall we do the problems? Are we ready? If you have any doubts, please ask me. Before we go to the problems, if you have any doubts, please ask me.